The AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 118. My name is Cyprian Francis, and with me, as always, looking fresh in the blue on blue today, Mr. AJ Brown. How you doing, AJ?
That's right. I got a new chair, and my wife picked out this dresser thing, this outer coat, in order to match with the blue chair.
It's looking good. It looks very comfortable. So I'm glad to see the progress at the new home studio coming along. We're making some progress here. And the economy is making some progress. Big headlines today. A lot of news this week. Where do you want to begin?
I mean, I guess we could look at the weekly calendar of economic news, right? Let's start off with taking a look at Tuesday. So Tuesday we had consumer confidence, which I checked out pretty closely. Consumer confidence came in hotter than expected, just by a little bit. But the way that this number works is if it's above 100, it's hot. So at 114.8, this is some of the highest consumer confidence numbers I've seen in the last 25 years. So this is showing that consumers are out there and they're spending some dollars, right? So that was something I took note of. But then Wednesday came along, and of course, the Fed had been meeting for 2 weeks, and we already had taken off any rate drops off of the radar a while back. But they were even, this was the one meeting, 4 times a year after the meeting, the Fed has started doing these press conferences. And this was one of those meeting announcements where there was a press conference that followed it. And the press conference, the Fed came off quite hawkish in their rhetoric. And it even caused some thoughts that, number one, that the thought that they would drop rates in March wasn't going to happen. After all, in fact, I watched almost overnight. If we take a look at that of our Fed Watch tool, I watched almost overnight as this number, we had it where this right here dropping the points by about a 1/4 point rate hike. That was, the majority of investors thought that was going to happen. Almost overnight, that number soared to 80% thought that we would just hold our rates. So pretty much the thought of dropping rates in March off the table now. It's still somewhat on the table for May, although this number seems to be dropping, and the number for staying the course in May seems to be going the way. And that's all because of the rhetoric coming off of the Federal Reserve. And then also kind of being, if we take a look at today's employment numbers, man, the employment numbers came in hot this month for January. You take a look at the consensus, they were expecting 170,000 new jobs, 353,000 jobs. So that's like just about more than double what was expected. The prior number for December was revised up by over 100,000. The unemployment rate's back down. In other words, the employment picture is stronger than ever, which is not a bad thing, but it does mean that the Fed probably wants to focus on controlling inflation. There's one other thing that the Fed didn't talk about, but I noticed, and that was, remember, interest rates are one way to tighten the economy. Rhetoric, we often talk about, is another way to tighten the economy. In fact, rhetoric seems to be one of the most powerful ways to tighten the economy versus some of these actual tactics like raising interest rates. But the third way is this thing called Fed tightening. And they really don't bring this up very much. Sometimes it gets like the headlights of mainstream media on it. But I like to look at it because it has such a big impact on the bond market and ultimately the overall economy. And I've noticed that the Fed is slowing. If you take a look at the more recent selling of bonds, the Fed is slowing their bond selling. Now, it was my understanding that their goal was to get back to, if we take a look over here, let me see if I can stretch it correctly without moving it, get back down to about 5 trillion in held debt by the Fed. And we're only up here at about 7.6 trillion. So we have like 2.6 or more trillion to go, but it looks like they're slowing down. And that's making me wonder, are they, if you slow down this tightening, it means you're trying to accelerate things a little bit. So I'm looking at how they're pulling their different levers as well as what they're saying when they have these press conferences. And it's not really there. All three methods are not jiving with each other. But things are hot. With the initial rhetoric, if you take a look at the S&P 500, we really saw some, dropping on that afternoon and then major dropping on the next day, right? But then we've recovered. So, yeah.
Well, I just want to touch on the employment number. The Benzinga headline this morning was, I think, summarizes what you just said, where monster jobs growth well above expectations destroys Fed rate cut bets, which you just indicated with and so with that being said, our assumption of rate cuts in, it looks like up until May, you went back. So that's like the next 3 months. We're going to kind of sit where we're at, right? We're not going to be increasing rates. We're not going to be decreasing rates. We're going to be relying on that rhetoric, like you said. But in that respect, last week, we were looking at these markets, the S&P being at all-time highs, and it kind of setting itself up for a break. And it seems like it did make the break to the upside, but it's still kind of choppy because it's all new upsides, right? I think we're over, 4,900 now, and
we're totally overbought. We're totally overbought.
Which and how do you get that assumption?
Well, just looking at some of the overbought, oversold indicators. So if I go ahead and pull on one of our overbought, Larry Williams of Williams Percent R, he's kind of one of the people I like to look at for overbought, oversold. And if I pull that study up, I mean, take a look over here. Anything above, so I actually modify this indicator. Usually when you take this indicator out of the box, it has its thresholds at 20 and 80. And I like to look at the 10 and 90 thresholds. So I'm actually, when it clicks my thing for overbought, it's extremely overbought. I like to set it for telling me when we're extremely overbought. So anything above this 10 or minus 10 number is considered extremely overbought. And so as you can see, that's where we're at. We've been there. We've been overbought, for months now. And so that's something that people have been looking at, is that there's a lot of money in the markets that it has no foundation for being there.
Yeah, and we're going to be having to make that case for the next 3 or 4 months, because it seems like every day when the market opens, there's nothing but buyers, because we don't necessarily know what would pull the market back. But
I want to point out that in just the last month, I mean, for a while there, since October, there was just pure strength, right? But in the last month, especially as we've gotten above those all-time highs, the pullbacks that we're seeing are increasing in frequency. And so that's something to also take note of, that investors are cautiously optimistic. They continue to push things higher, but whenever there's any little tiny tidbit of bad news, they're ready to start selling. And so, and somebody talks them off the fence right at the last minute. I think we have to watch and take note of that's increasing in frequency, and in some respect increasing in magnitude. That and the fact that I pointed out that we're coming to a consolidation point in the next few days, kind of is having me on edge as far as following any sort of bullish trades. I'm ready, Sip, in order to close out of my bullish trades and change perspective at a moment's notice, because I really feel like at a moment's notice everybody could just start selling.
Yeah, and this is I'm going to go ahead and paste one of your quotes from our notes this week because I think it's relevant, and that's this is a fantastic market for option traders that can profit more than on directional moves. And so uh which approach are you looking at the most in the market that we have set up now? Is it the covered call writing because it kind of functions as this insurance contract that as the market pulls back, I get to keep it and like basically make up for any of my losses of some of the names that I might be holding?
Well, of course, I am like the guy who's branded as the disciplined options trader, and the majority of my portfolio is always circulating in premium selling trades. I like to sell options premium. So, of course, that's got my focus, and that's pretty much what we always talk about. But I have to say, I have been playing in the last 2 to 3 weeks with swing trades, right? Directional swing trades. I actually went back to my material that I pulled from my full-time options trader course from over a decade ago and dusted off some of my swing trading strategies. And I've been having quite a lot of success. Again, with the caveat that should things finally go bearish, I'm ready to liquidate all those swing trades, take my profits and run. So I'm kind of on the edge of my seat, ready if I get any indication that things are going down for an appreciable move, then I'm going to be taking profit. The way that swing trades work, Sip, is exactly the pattern that we saw in that S&P 500 that's been showing up over the last months. You've got a nice strong trend, and then something pulls it back, and you trade the swing back up. Something like these moves that I outlined a little bit earlier. This kind of move right here, where we've got a little bit of a pullback, and then right after there, it recovers, pullback, recovers, and we've just recently had another pullback. So I've been playing around with my swing trading, more of just kind of taking advantage of what the market's handing me right now, rather than this is my main strategy. But we'll probably want to show some trades of that. My trade of the week is going to be a swing trade.
We'll get to the trade of the week in a few minutes. I do want to just give everyone an opportunity to download that indicator. So if you're looking at the screen and you see the red arrow down, the green arrow up, that's AJ's proprietary indicator. We still haven't come up with a fancy name for it, but it's AJ's custom indicator. And we're giving it away. So if you're a Thinkorswim user, and I mean, if you kind of look at the past 3 months, there's some pretty good triggers there. AJ's giving it away for free. So the link to that is in the footer. I'm going to go ahead and throw it into the chat real quick. AJ, do you want to just add anything about the indicator?
Yeah, I'm just going to add that we're the folks over at Metastock are reprogramming the indicator so it works with their platform. So hopefully in the next week or two, we'll be able to give for free as well the Metastock version.
Awesome. So I went ahead and threw that into the chat. As always, we're broadcasting live. So if you, the fans, our wonderful viewers, have a name that you want AJ, a stock that you want AJ to run through, feel free to throw it in the chat. If you have any specific questions, feel free to throw that in the chat as well. I know we have a wonderful topic of the week that we're going to cover here shortly. And also want to give everyone a chance to check out AJ's daily workshop. I know we're talking a little bit about covered call writing. We're talking a little bit about swing trading, puts, calls, options, strangles, straddles. If that seems a little overwhelming, this is a great place to get started with
Good primer. Good primer.
AJ's approach, the way that you can incorporate some of these strategies into your own portfolio. So the link to that is also in the chat. That is a daily workshop. Feel free to throw those questions in the chat. We're going to take a little break. We'll be back in a few seconds to go over our topic of the day, topic of the week. So sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Topic of the day. So, what we appreciate about the viewers and the fans is that we have people from all around the world tuning in, because these strategies and investing, it can be a worldwide endeavor. And so we highly encourage everyone to get involved no matter your age. And so one of our more active, one of our favorite viewers had a lovely question this week that he wanted to get AJ's input on, and we thought we would share it with you. And so Manny, who is our 11-year-old viewer, he's in 5th grade. Manny wants to know, AJ, why his broker has a hard time with positions he is legged into, and what is that all about?
Okay, so legging in, I guess for our viewers out there, you know that option strategies can consist of many option trades, right? So for instance, an iron condor is actually made up of 4 option trades, right? A straddle or a strangle, 2 option trades. A covered call, typically a stock and an option trade, right? So these are different trades, and you can do the trades where each leg is done at exactly the same time, or what I teach a lot of my program participants is how to time those different legs to make the strategy more productive, which means higher returns, lower risk. And so we leg in to the position by doing the individual option trades at different times and dates. Now, what Manny's finding out is that our brokers tend to get confused by that. And Manny, this is a very interesting question because it has to do with a lot of how the business of doing trading has changed, especially in the last 20 years, 25 years that I've been part of it, right? Originally, there was a whole industry and there were actual traders. And when people like me, individuals, would want to do trades, we would have to basically go to the broker and tell the broker, who would then communicate to the floor traders what we wanted to do. And the floor traders would then use their expertise to do these different things. And if you remember, you won't remember because, you're 11 and in 5th grade. But for some of our viewers, you might remember a time like just as recent as the 1990s and early 2000s, where when you wanted to do an options trade, you had to pay like $25 commission, right? And so fast forward to today, brokers have had to become quite competitive with each other. And to get different folks involved, one of the things that they've had to do is offer lower commissions. Now, that's been possible a lot because of electronic trading. A lot of these traders that had the expertise have all been let go. I know because a lot of them work here at Trading Trainer as educators now. But back in the day, they were the ones who were receiving your wants and wishes, and then they were using their expertise to execute those different trades. Now, a lot of the platforms have these option trading strategies programmed in, but they're programmed in so that all the legs are done at the same time. And if you do the individual trades and you know what's going on, like you're legging into the positions, The broker who no longer has the experience of these expert traders is looking at your trades as individual option trades, not trades related in an overall strategy that you've gone in. The only way they think it's an overall strategy is if you press their button that says Iron Condor and it shoots off all 4 option trades at once, right? So it's kind of dumbed down. And the reason why it's dumbed down is so that, they've gotten rid of the expertise so that they can offer us cheaper commissions, right? They didn't want to pay people. We didn't want to pay people, but now it really falls on us to be experts. So a lot of times what winds up happening, like for instance, when we leg into a covered call or leg into a covered put, when things, happen, the broker looks at it as a separate stock trade and a separate options trade. Now, the side of the brokerage that makes sure you're not doing anything wrong, they can analyze your portfolio and determine that, yes, your risk is covered. So they say, okay, he's doing some okay stuff because he's got his portfolio. He's got a covering position in his portfolio. But when it comes to unwinding these trades, like for in case you get exercised, right? They don't link those trades together because they weren't done in the same time and they didn't get sent to their dumb market controlled by the electronic trading anymore as a covered call. They got sent to the market in their dumb trading. They lost all the experience of the actual traders on the floor that knew what was going on and could keep track of all the legs of these trades, in their heads or on their pieces of paper. They lost all that experience. And so now the only trades that get executed as your strategy are when you press those buttons. So it gets a little bit more where the responsibility is now on you instead of the broker. You call up your broker's help desk and they've even lost the experience. You have to like delve down into different tiers of support on the phone because the original support person on your phone won't even know what you're talking to. You're smarter now than they are, right? And so you'll say, "Well, I'm legging into the position," and they'll kind of fall back to, "Well, you didn't press the right button to do a covered call." And you're like, "Well, I actually am doing a covered call. I'm just doing it." And you'll short circuit them. You totally will short circuit them. So it's up to you to understand how to unwind the trades because those people on the floor that used to do it for us and knew what was happening, they're gone, right? They got let go a decade or so ago. So, it's now up to us. So, it's worth a call to your broker. There are some brokers out there and you can actually, build these relationships depending on the amount you're trading with the remaining traders on the trade floor and perhaps get them to work with you. They might flag your account for special care or something like that. But more than likely, what you're going to find is, you're going to have to handle these different legs, not just the opening, but the closing of these positions yourself. It's not that much more experience that you need, but you can't trust because after all, you're getting these bargain. A lot of brokers now don't even charge commissions because they've got pay to order, like a Robinhood or something like that. So, you never get something for free. So we're paying like 0 in commissions these days, but in return, we have to know what the heck we're doing and be able to unwind our trades ourselves. It's a whole thing. And there's questions, should we have these experts or should we get lower commissions? But you can't have your pie and eat it too, Manny.
Yeah, that's what I was thinking is that's the trade-off, right? We're losing the expertise, but we're gaining the speed and maybe the charting and the reporting. So staying
It's
on top.
why we have to, be our own experts. It's why Trading Trainer does so well, Sip. It's because people are coming to us to get, internalize the expertise.
And every Thursday you get together and have your mastermind session and you can kind of dive into these things. I was thinking while you were answering Manny's question about, because you mentioned how things used to be 20 years ago. And I feel like today's kind of a big day for what we can expect for the next 20 years. And I don't know if you saw the Apple Vision come out. But they started the VR headset for Apple. They started to sell it to the public today, and there's a couple videos starting to come out of the ability to analyze data in this VR space where you can have multi charts and like,
Oh, I love it.
so I was thinking, I was like, oh, okay, if you got all these legs and whatnot, what tools in the future, what is that going to look like in the future? And I think it looks something like this, where you're putting a headset on and you have more info than you could ever have in the multi screens that you're in. And I just see this and I'm like, wow, I can't believe we're gonna live to see the 80s version to the VR headset, uh, virtual trading floor. But you're right. At the end of the day, it is up to us now to decipher the data and be wise and make good decisions, because bad decisions could really go against you. And that's the whole reason behind trading trainers, to help people profit, help people make more money, and make better investment decisions. Always keeping track of your risk. So thank
I
you for
gotta
that,
tell
man.
you, just to bring up that whole VR headset, you guys probably don't see it, but I have 8 different screens, and I've had this trading system. Gosh, I set this up. I think I started with 2 screens back in 2005, and then it went to 3 screens in 2007. I'm up to 8 screens to get that immersive thing where I can move charts on different screens. I can't wait to be able to put on a headset and just do the whole, what was that called? Minority Report, where the guys were like moving things around and solving, that's pretty much what trading is now, is solving mysteries and creating plans about how you're going to deal with things and be able to, I can get rid of all my screens and just be in here and immerse myself the way I've basically immersed myself with the technology of not even today, but of yesterday. I can't wait to upgrade to today into the future.
Well, it's crazy because it's got a $3,500 price tag, and like all the social media is like, oh, Apple's dropping a new product, 3,500. No one's gonna buy it. A line out the door of people ready to purchase this new Apple $3,500 product, because it is, I think, one of the better VR contraptions, because I have the Meta, and I don't think you still need to use like the handles. With this one, you're like using your fingers and you're like swiping. It's pretty
Well,
impressive.
Apple's never, their strong suit has never been software. Apple is a hardware company, and their hardware, I have to say, I mean, I don't have it on right now, but I have the Series 9 watch with hand gestures, and I can now do things, and the watch detects what my hand is doing. I mean, their hardware is second to none. So kudos to them, man. I can't wait to try it out. I'm not going to go wait in line, but I'll order one online.
Yeah, it's impressive. So we'll keep the viewers updated if we learn about any fancy new software. But it is cool. All right, thank you for that, Manny. Our topic of the week, learning
Happy
about how
birthday, buddy. I've always thought of you as a 10-year-old in 4th grade, so I'm glad you updated us.
Manny's going to be the best trader in the world come 2030. He's going to have 2 decades of experience. So thank you for that, Manny. All right, we're going to keep the show going all week. People and AJ and the team and the trading trader community are looking at opportunities. And so this is the part of the show where we like to get AJ's pick of the week. And so, AJ, for this week, you've got a swing trade in mind. And this is a name that I think many of us are familiar with: Verizon, ticker symbol VZ. What are you seeing? How are you feeling? What's the setup?
Well, okay, so so like I said earlier in the show when I was wetting people's palates, I dusted off some of my swing trading strategies. My swings trading, yeah, I guess we could call it a strategy, where I look for a couple of things to line up. And again, the whole theory behind a swing trade is that you've got this trend going, and then something kind of bucks the trend temporarily. But because you've got so many investors really like bought into that trend, that if you look for those pullbacks, you could take advantage of the swing back up to the trade. That's why it's called a swing trade. And so I'm showing Verizon here. Now, I saw, I'm looking at these light green bars. So I saw a couple of indicators, and I want to just preface to everybody, I am a tried and true end of day trader. That means that I'm not there during the trading session. What I do is after the market is closed, I look for signals. If I see those signals, then I will either, number one, be in the market the next trading day looking to see that those signals get follow through, that a couple of things click off the check boxes and I place the trade. Or in the mid 2000s, I realized my trading day was, something that I wanted to do other stuff on instead of sit in front of the computer screen for the 6.5 hours that the market's open looking for follow through. So I actually started to outsource it and hire other people to do that for me and either place the trade or not place the trade, so long as those follow through check marks were off. And then more recently, like in the last 5 to 6 years, with all of these platforms allowing you to program in automation, conditional and contingent trading, I've taken the outsourcing back, and in the evenings, I just set up conditional trading. So I set orders that are conditional based on making sure those boxes are checked off. And then every end of the day, I just see if my trades went through or not, if those conditions were met and the automatic trader placed the trade and my order was filled. So with that said, these arrows shown by my free indicator are all end of day signals. When you look through and you actually see whether or not you got follow through, I got follow through a couple times, and I actually placed a little bit of some trades on Verizon, just a small modicum of swing trades. And so when I'm doing a swing trade, I actually look for this pattern to show up. So I look for my confirming indicator, but before my confirming indicator, I like to look up a leading indicator, and I use that Williams %R. And I also like to make sure that there's at least, a 3-month or 2-month trend building, so that I know that there's investors who have bought into that trend. And so I got those end of day signals, but I really didn't get the follow through until about, the end of the year of 2023 into the beginning. So I placed just some fun money at it. And then I got some sell signals, but those sell signals really didn't get the follow through that I wanted. So I never got out of the position. Instead, I got more buy signals. So I doubled down. I actually increased my trade size. And sure enough, they've popped again. What I'm pointing out here, Sip, is I'm about to get maybe a sell signal. And if I do, boy, the leveraged option I chose will have gone up about 75% in the last month. So, even though it was a pretty small trade, I think it was a couple $1,000s, I'm going to get a 75% ROI, which is fantastic. But Verizon is showing that behavior, assuming that the market doesn't collapse, where we might queue up for another trade. And so that's what I wanted to highlight today, that it's been working for about the last month, and I'm actually going to be looking for the next swing trade on Verizon, and everybody else should as well.
And I imagine Verizon is such a big company that it doesn't get as persuaded by news events. Is that a fair assumption?
Yeah, I think so. Usually Verizon, I don't like companies that are in the mainstream. And Verizon kind of just operates in the background. They've got, pretty much an ongoing income stream. You could see they just reported earnings. They're always creating a profit. They're a pretty big company. They're pretty much one of the three that provides the backbone for our whole wireless picture here in the States. So yeah, I think that they're fundamentally a strong company. So I like the fact that they respond more to the broad market than they do to little headlines here and there.
Yeah, and I imagine it's in the S&P, the Dow. It's one of those bigger names. It's in those indexes.
Yep.
Guess we'll have to double check.
Should I show people the exact pattern that I'm looking for the next pullback?
Of course, that's why we were highlighting it. What should we be doing next, AJ?
Well, here's the scoop, right? I'm putting some indications on my screen here. The first thing I'm putting on is this 30-day simple moving average line, and that can kind of tell us that the trend is in place. You can see that for this whole time since about the end of October, Verizon has been trending up, and the longer that this 30-day simple moving average trends up, the more investors that are bought into the fact that Verizon is going to be going up, right, in the medium to long duration. So once we got to a certain amount, like 2 or 3 months, now we're looking for the opportunity for swing trades. So with swing trades, what we're looking for is an overbought, oversold indicator to temporarily go oversold. And the more extremely oversold, the better. So you can see the Williams percent R, it dips down to this extreme oversold a couple times in the last few months, right? And so that's our indication that, a swing trade might be setting up. I've got a trigger. And then, like I said, my confirmation, in my case, I'm going to be using a close crossing the 7-day simple moving average. And that's what I have configured my indicator. So you can see here, here's a close. My fast length is basically a 1. That's the same thing as saying a closing price. And my slow length is a 7, right? 7-day simple moving average. You can see both of these are set to simple. And if you guys remember from some of my previous shows, I've been using the volume weighted average close versus just a regular close. So I've thrown in a little bit of makeshift volume validation into this whole confirming indicator. So I get those end of day signals. I look for next day trading follow through, and that also works for my exit signals, not just my entry signals. So my entry signals, the same indicator that gets me into the trade will be the same indicator that gets me out of the trade. So that signal is forming today for me to go ahead and exit. I'll see if I get follow through on Monday, because of course I'm not going to act on this until I get the true end of day signal and I get the next day or the trading day follow through that follows that. And so that might be, I might be liquidating my position in Verizon maybe Monday, Tuesday, we'll see. But then I'm going to look for it to reload and go all over again. So maybe in the next 2 or 3 weeks, I'll have another one of these swing trades in place.
Awesome. Verizon, ticker symbol VZ, AJ's pick of the week. Add it to the watch list. We've got a couple more names to run through in our speed round. Once again, just want to remind everybody watching that if you have a name that you want AJ to run through, feel free to throw it in the chat and we'll see if we can get to it. Otherwise, we've got a few really interesting popular names that I think are worthy of running through and getting your analysis, starting with a name we cover very frequently. Sam from Ann Arbor, Michigan is interested in General Motors, ticker symbol GM.
Where are you at on this, Sam? I wish I knew. There's been people who have been shorting General Motors. There's been people who have been going long on General Motors. We've been watching it. Let me go ahead and ditch this. I'm going to ditch this leading indicator, the Williams percent R right now. We don't need it to look at this analysis. Let's also ditch my swing trading indicator. So you'll notice, folks, just as a best practice, only have visible the indicators that you really need. Don't overcomplicate your charts, because that creates, confusion, especially when we're trying to figure out exactly whatever you planned in your trade plan is what you should be looking at. So, in fact, I might go one step further, and for Verizon, I like to look at my fast MACD. So I'm going to bring up my fast MACD indicator. Again, I have my fast MACD programmed into my free indicator. It's right here. So I have my free indicator. You could see right here on my chart, I've got multiple of my free indicator on here, and they're all configured for a different signal. So I can view and hide the different variations of my free indicator. So I'm looking over here. I see earnings came in on GM that caused a big pop. My question is are you short? Are you long? Have you sold premium? And what is that premium, put or call? I can see that for anybody who was long GM, and then there's some signals here that I saw over the last month where you probably sold some call premium. You're probably wondering, now that earnings has been released, you know, should I sell call premium again? Should I liquidate the position? If you sold call premium here, I would imagine that call premium expired on the third Friday of January, as premium does. And now you're wondering what to do. You're simply long the stock. Your break-even price has been reduced because you've been collecting one or two premiums over the last couple of months. And so, Verizon has popped. And so it might be time for you to just, at this high, liquidate your position and take your profit. But it does also look like Verizon, after this big pop from earnings, is somewhat stalling. And so that might be yet another opportunity to sell premium. You don't want to sell premium at the same strike price you were. You want to sell premium at the higher strike price. That means you're going to make some additional cash. You're going to reduce your break-even price on Verizon even further. And then should somebody want to exercise your position, basically say, hey, I'm going to go ahead and buy your stock at that strike price, then, if you bought in here down at, $28, $27, and somebody agrees to buy your stock at $39 and you've sold premium 2 or 3 times since then, probably reducing your break-even price from 27, you could have, let's actually take a look at what the current at the money option price is. Pulling up our data here, looking at 16th of February, which is the next monthly expiration date. Of course, if you're looking at weekly options, you'd probably want to go about 2 to 3 weeks, maybe 4 weeks out. But gosh, you're getting 66 cents a share. So if you're talking about reducing your break-even price by 66, 75 cents per share each time, instead of being at the $27, $28 mark, you might be as low as like $24.50, $25. So you bought something for $25 and now you get liquidated at $39. That's not bad, man. That's not bad. So I think you're on the right track here. Just trade your signals and trade your plan as you see it.
Yeah, and we were looking at GM near that bottom there, and I think the pop happened off of some news, or the auto strike ended, right? Something helped push that through. But we definitely were eyeing this one for a while. So if anybody was able to take advantage of it, I mean that's a great trade right there. So
Yeah.
thank you, Sam. That was General Motors. Moving on to our next name. This is Bill in Casa Grande, Arizona, interested
Oh,
in crypto name Coinbase, ticker symbol COIN.
yeah. Casa Grand, I have fond memories. I lived in Tucson for quite a while, pursuing my master's degree at U of A. And Casa Grande is halfway between Tucson and Phoenix. And it used to be like just a pit stop, like literally a truck stop. Um, a lot of people know I'm way into classic cars. And back then, I drove a 1963 Ford Galaxie 500. And there was the most stellar boneyard in Casa Grande where you could find parts. I mean, nothing rusts in the desert. So you could find parts for your, 1950 Buick Fireball 8. You could find all sorts of parts. And I remember finding some new fenders for my 63 Ford Galaxie 500. I wonder if that boneyard still exists. That was about 28 years ago. But and I think Casa Grande is where the factory for Lucid EVs is built. So I think Casa Grande is a much different place than I remember. And I hope you're not actually mining. Arizona is a hot place for you to be running any miners. So maybe that's why you're interested in Coinbase, because Coinbase, of course, is based on crypto technology. So that's cool. Taking a look at this pattern, wow, Coinbase has really popped up a little bit. So some people might look at this and say, hey, is there an opportunity for a swing trade? And I want to draw your attention to the fact that the 30-day simple moving average that we have overlaid on this chart has faltered and is starting to go down. And what that tells me is the pullback that we like to trade on a swing trade, it pulled back so much that investors lost their belief that this trend is going to return, right? You want to have investors bought in, and when you have these temporary pullbacks, these investors rush in and start buying and cause that swing. Well, what this tells me is that sentiment from investors has faltered, and so that swing trade phenomena isn't going to happen so much. But at the same time, we did get this buy signal, and I can tell that on January 29th, so that was just a few days ago, January 29th, we totally got follow through in order to go long Coinbase. And it looks like after getting that follow through, we've had a little bit of faltering. So you may, take this opportunity, if you believe in those end of day follow through signals, to go ahead and jump in anyway. And it's fine that you're a couple days late. That's what I like about our premium selling strategy, that it's not super duper time and date specific. You can be late with your entries and still make a chunk on it. So I could see why you might consider wanting to go long. I haven't checked in on the fundamentals on Coinbase recently. I would pull up like news headlines, make sure everything's cool. There's got to be some benefit as well to the fact that we now have some ETFs trading cryptos. So yeah, I would do my due diligence, but I could see you still acting on this signal. And then because we don't have, tested support and resistance, tests mean that we have at least, two. The better is to have more tests. Here we just have the one test and the one test. So if we have price action going up, fine, let that thing appreciate. If it decides to test a second time where we had our recent highs up at 180, that's a premium selling opportunity right there. So I think that you've got something here. Make sure you do all your due diligence. Don't jump in on this if there's something in the news headlines or there's something coming up in the scheduling for releases from Coinbase that could, throw a kink in our works. But otherwise, yeah, I'm all game on this one. Good luck.
Yeah, and it seems to be following the overall crypto trend in terms of Bitcoin rising over the last couple of weeks. And the news that I've been seeing around crypto is there's a halving coming soon,
Yeah.
which should have some sort of an effect on the overall Bitcoin price. It is, I mean, 42,000 is, I think 50 might be the high, 48, something like that. So definitely heading back up there. So the only thing that I see as a warning is it's a pretty expensive stock. $120, something like that, Coinbase. So you gotta have the portfolio for that. So thank you for that, Bill. Analysis of Coinbase, ticker symbol COIN. Moving on to an international destination. This is Tingy from Kuala Lumpur, Malaysia, interested in Taiwan Semiconductor, ticker symbol TSM. I feel like semiconductors are a hot name in this Q1 2024 start to the year.
Although, this past week in our earnings cycle, a lot of those big companies, both Microsoft and Meta and Apple, they've been kind of disappointing some of with their current quarter of results. But with that said, look at this. So they reported their earnings on January 17th, and that must have been something positive. You know what? I would look at this as a swing trade, very similar to what I'm doing with Verizon. So this is definitely, we got issued a exit for any sort of swing trade you started back here on these entry signals. And it's so cool that the entry signals totally played earnings correctly. I'm back testing with my eyes here. And we got our exit, and the follow through was on January 31st. So I would totally do the same thing. You notice that we've got that trend from the 30-day simple moving average, and that has not faltered. Even when it slowed, it still was positive. So I look for that before I look for going forward with a swing trade. Another way to do that is to also look at the beginning of the move up and getting for yourself a linear regression line. That's usually a tool you can do. So here it is in Thinkorswim. So starting right about here and drawing your linear regression line all the way to the current and just making sure that's pointing up, because that tells you that investors are still, bought into that trend. So cool. We've got our trend. The next thing we do is we look for our trigger, and I'm going to recommend to you that you use something like the Williams %R. That's the one I've been featuring. Larry Williams still alive and kicking, doing his thing, I think. I'm going to be looking for when it comes down, and the more oversold, the better, like it did in the beginning of January, extremely oversold. I've got my oversold line here at a -90. So if you're setting it up to be similar to mine, look for that oversold indicator. So it's pulling back. I'd want to see it pull back even further, and then look for that signal. And if you've got your indicator set up the way I do, go for it, right? Use that close, that simple close. In fact, I think I've got my fast MACD up. Let me switch back to that other one so you guys can one more time see the way I've got my indicator set up. So it's a moving average crossing simple 1 in 7 based on volume weighted average price, no 1-bar reversal filter. So turn that guy on. I'm going to turn off my fast MACD. I don't really turn it off. I just hide it so that I'm not looking at it. And so, yeah, same thing. Got my signal. I'm going to wait for the next green arrow, especially if I've got an overbought leading up to it, an oversold leading up to it. And that would be my end of day signal. Want the next day follow through, pull the trigger, and then use that confirming indicator as my exit signal as well. So that's what I would do here. This looks like a perfect swing trade setup.
All right, it seems to be the topic of today's episode is some swing trade setups and a lot of overbought, especially when we look at the general market. All right, thank you for that, Tingy. Heading into the end of the show, AJ, looking at maybe February and the beginning of February started yesterday. The next week, what should we be keeping an eye on? What do we have on the horizon that you think is worthy of attention?
Yeah, we've still got our earnings season. It's just, we got about another week or so on that one. I also want to point out, January often defines the whole upcoming year. And I was curious whether January would be that for us, whether January would be an up month or not. So here you can see this is the bar for January, the monthly bar. We started the beginning of the year at 4,745.20 on the S&P. We closed it out at 4,845.65 for the S&P. That's an up month, and if you follow just history, what happens January happens for the year. And so I'm looking forward to kind of the Fed bringing us down for that soft landing, the first time that they'll do that in about 30 years. and making it possible for us to continue with the markets, seeing this optimism. But I'm also cautiously looking. I mean, I can't ignore, Sip, I just can't ignore that we have this bond yield inversion that I've just mentioned a few times in the shows before. I can't help but notice that we've got this converging pattern that's been happening. So I'm cautiously optimistic, as it seems like many investors are, and I'm ready to start selling along with everybody else.
Yeah, it seems as if the markets are still liking the employment numbers today. Nasdaq up 230, S&P up 45, Dow up 63. So looking like we're going to be closing the week up near those all-time highs. So we'll keep an eye on that. Real quick, want to also give everyone a chance, if you've enjoyed the broadcast, if you're interested in learning a little bit more, getting a little bit more attention when it comes to these strategies and how to implement them in your own portfolio, AJ's got a wonderful one-on-one training program. I just threw the link to that in the chat, so head on over there. If it's something that you're interested in, just head on over, find this yellow button, schedule an appointment. I guarantee you it won't be a waste of your time. You'll definitely get all the answers that you want. So head on over there if you need a little bit more one-on-one training to get your options game up to par. That's all we got for her today, AJ.
What episode are we on, Sips?
This is 118.
Holy moly, I can't believe we've been doing this for that long.
Well, every week there's amazing options trading opportunities, and we're just trying to educate the public on them and invite everybody to become a member. So if you're not a member yet of the Trading Trader community, click on any of those links that we sent over, send us a DM, hit that like, hit that follow, hit that subscribe button if you want to just follow along. If you have some questions, leave them in the chat, send us a DM. We appreciate it. And we'll catch everybody next week.
See you on the flip side.
All right, guys, take care.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.